Um, Good evening, everyone. It's been a while I use this platform, so I don't even know what's up. What am I even doing? Guys, just decided to question. I'm trying to share my screen. I think the error is from my end here. Let me just get something straight. Count down. Okay, I think we are good now. All right. If you can see my screen, please can kindly drop a comment in the chat box so I can see. I want to be sure you guys can see my screen. Kindly comment on the chat box. If, Leave a comment on the chat box if you can see my screen. Okay. Okay, so let's start. Sorry for the delay. And let's say we have like 1 to 2 hours to do this. Let me share my camera so you guys can also see me. Um, okay, yeah, let me try. I think that's okay. Yeah, right. It's not showing no more. That's okay. My feelings. All right, so let's start. All right, so we have like 15 people here, and I was supposed to also stream this on X as well, but there are some things I didn't do. Um, regarding to settings, so I couldn't. So maybe next time I'll also stream it to X platform so more people can join. But I really want to focus on YouTube, and what I'll be doing here is I'm thinking of going live once every week. Either we choose a day, either Monday or Wednesday. We'll be going live every single week. And what I'll be doing in this live is to do market breakdown for traders who are looking to learn a profitable strategy and also learn how I trade and also how I approach the market. So for most of you that are coming here, I know you guys are coming from my Telegram channel, and yeah, you've been following me for quite some time now, and you can see how effective it is. And every single day and every single week, we are closing in profit and making good returns. So I have a whole lot of things to offer you guys. So if you are new on my channel and here on my YouTube, kindly hit that subscribe button because I have a whole lot of information that I'll be passing on to you guys. And I promise you are going to be learning a whole lot from here. So it is not a waste of time. It is not something you feel that you're wasting your time. Just come here, participate, and follow up with whatever thing that I'm going to be sharing with you guys, and then you get the value you actually spend your time on. All right. So what I'll be doing here today is I'll show you guys how I approach the market, what I look out for, and the things I really want you guys to understand. So what I basically trade is structure. I trade key level, structure, and um, my entry model. So these three things are the only things I trade basically. It is not that complicated. It is a very simple system. If you have been following me, and also my charts are always very well detailed enough for you to know exactly what I trade, right? So it's a very simple and profitable system that I've been using for some time now, and it's actually something that I also teach my students, and they've been doing greatly well with it. So, if you really want to make sure that you want to end the year with good strategy or something, you should always remind or know that okay, I learned this thing from Michael Banks. Then you should pay close attention to whatever thing I'm going to show you guys today. It is going to be very quick and then no fluff, right? So stick around. So first thing I do, I know most people have different ways of trading, right? But what I'll be showing you guys today is very, very simple. Like I said, I trade what? I trade key level, right? I trade key level. I trade what? Structure. And what? My entry model comes top. Okay. So these are the three things I trade. And I want you guys to pay attention. Key level is very, very simple and easy to identify on the chart. And structure is where we have um, the difficulty because a lot of traders find it difficult to understand structure. So, like I said, we have like 1 hour to 2 hours to do this, and I'm going to make sure that I take my time to show you guys how to mark proper key levels and also how you can read structure like a professional. Then also my entry model will also be shown in I also teach my entry model in this particular live session. This live session is supposed to be like a kind of pre-market breakdown, right? To show you guys pairs and what I'm actually looking out for. But here we are also going to be touching some few pairs, but I just want you guys to pay close attention to how you can spot key levels on the chart. Number two is structure and then the entry model. So these are the only three things you need in this particular live session, right? So pay close attention as I'll be diving into the chart right now. So number one thing is we all know that candlestick forms like this. All right, we have candlesticks like this, And there are some secrets to marking key levels. And that secret is knowing which broker you should be using when marking your key levels, because all brokers cannot give you the same thing, right? All brokers cannot give you the same thing. So if you're familiar with tradingview.com, on the TradingView is where we basically do all of these things, analyzing the charts, which I know very well that you guys are familiar with that. Okay, I know you guys are familiar with that. So key level, let's say this is a bearish market, right? So this is a bearish market. We all know that if you check my charts properly, we all know that marking key levels, candlestick must be equals to what each other. So which means this candlestick must be equals to this candlestick. And also on the downside, which is acting as our what support, this candlestick must be equals to what this candlestick. Okay, so now this makes this word level a key level, and also this one was a key level as well. So now when you spot key levels like this on the chart, all what you have to do is very, very simple, is for you to wait for price. If price is coming from this level, if it comes here, then obviously market is definitely going to react to it. And if price is coming here, it will definitely react to it from this point, and then you look forward a short opportunity from these key levels. And now there are valid key levels and also there are invalid key levels. So when you are marking key levels, you have to understand and also know, is this key level a valid one or is not a valid one, right? So if it is a valid one, it is always going to be equals to each other. If it is not a valid one, you will always see it look like this. If it is not a valid one, you always see it look like this. It has something like this, right? This means it is not a valid key level, but most of the times it usually reacts to it because, like I said, it depends on the broker you're using, and then you'll be able to spot this very easily. Sometimes you'll see it this way, sometimes you'll see it this way. So it all depends on the broker you are using. Okay, so now with this information alone, it is enough for you to understand where and how to mark your key levels. So after this diagram illustration, what I'll be doing next now is for me to go on the live chart to show you guys example on the live chart. Okay. So now when you come on the live chart, number one thing you must understand is that higher time frame always play a key role when analyzing the market. Higher time frame is where we usually look at what the market is doing or what is happening on the charts, right? So without a prior knowledge of what is happening on the higher time frame, you will be finding it difficult to understand which key level is a valid one and also which one is not a valid one. Like I said, you need three things to become great at marking key levels, which is key level structure and then your entry model. So these three things will help you a whole lot. So now how I usually start when I go on my chart, I start on the monthly time frame. Even though I'm looking at trading the 15 minutes time frame, I don't joke with what my higher time frame analysis, right? I don't joke with my higher time frame because on the higher time frame is where I'm looking at these key levels, and then from the higher time frame it will give me a solid background on what is happening in the lower time frame, right? So here you can see on the monthly time frame here on GBP USD, you can see how price came into this level and it reacted off this level here, right? So reacting off this level is just giving you a clear instance that market is going to drop from this point, right? So as you can see here that when immediately price got to this point, you can see what happened, that it got rejected and it started dropping down to the downside. And now where are we expecting or thinking that the market is going? Definitely, I feel myself that maybe market is coming to this monthly key level, right? So this level here, we are going to be paying much attention to this level. But now, since it's a monthly time frame, we can't be waiting for this long for price to come into this monthly strong level again before we sell. So that's why now we have to scale into the lower time frame to see what is happening in the weekly time frame. So on the weekly time frame, you can also do the same thing and also maybe adjust your key level to match with the daily weekly time frame. And then also you can as well maybe leave this one here, since you already know this is a monthly low, and then you can mark this one here as your weekly low. Okay, so now these are the two range area we are going to be paying attention to, which is this one and this level here on GBP USD. So, and you can see here that price got to this level, you can see how it dropped aggressively to the downside. So if you were on chart, or even though you were not on chart and you had your entry here, right, and have a stop loss above this other high, you would see that you would have made crazy profit of this trade. And possibly if you're targeting this low, that's how you can either swing swing that trade, or decide to, maybe you want to do scalp, you can do scalp on it. So now with this, it is enough for you to understand how you can easily mark your key levels. This is something you wouldn't find it on YouTube anywhere, and nobody is going to take its time to explain this. I know the reason why I'm explaining this, I want you guys to have it for free, right? Though if you want to join or get into my inner cycle, this video I've recorded them, and it is well detailed in my mentorship video, which you can get it for as low as 50,000 naira. You can get these mentorship videos where I make sure that I break down how to mark key levels in two videos, in two parts, and then market structure in, I think, about 5 different videos on market structure. The reason is that market structure is very, very difficult for people to understand. And if you stick around, I'm also going to dive into market structure to show you guys how you can read market structure with, as in a very simple way on how to read market structure. I actually made a video on this channel here, how you can read market structure. If you check my channel, you'll see that video on market structure, and it will give you an insight on how you can read market structure like a pro. It is also well detailed because I make sure whatever thing I'm dropping on YouTube, it is value, right? So now these are the levels I am looking out or watching out for on the weekly time frame for GBP USD. So now how do you find entries? Because now a lot of people don't have the patience to wait until price gets to this point before they now take their entry. So this is where what understanding structure comes in. So now, if we have to switch to the daily time frame before we would understand what is happening, reading market structure, and know if there is a shift in market structure or not. Okay. So now this is daily time frame, and we want to focus on the daily time frame now before we move down to the 4 hour or 1 hour time frame to understand exactly what is happening. But first of all, on the daily time frame, we can clearly see that market is still what? Market was bullish before this and this, like that, right? So now remember, don't forget, this is our what? Monthly high, and this is our what? Monthly low. This is what? Weekly. So you can either like try to type something here to remind you, okay, this is weekly low. All right, you can type something here to tell you, okay, that's weekly low, and then this is a monthly high, sorry, monthly low. Okay, so this is weekly, and then this is monthly high. All right, so this is what? Monthly high. So with this, it is very easy for you to know, okay, so these are what? These are called range, okay? These are called range. So this from this low to this high and from this high to this low. So this is how market is just basically going to be moving. And as you can see, market has been moving inside this range for a very long time now, just ranging inside, moving inside this range. And anytime price comes here, it's going to react. Anytime price comes here, it's going to react. So basically, this is how you trade key levels. Okay. So now we are going to dive into understanding market structure. Market structure is very, very difficult. And I want you guys to understand and pay close attention because market structure on its own is a different, like entirely a different course, right? So now we understand that markets move in what? A zigzag form. And market cannot just keep going like this forever. Even the most volatile pairs that safe haven like gold, it doesn't move in a straight zigzag form, right? It moves and then it drops, which means it moves um, it makes pullback and it moves and makes impulse move and then it pulls back, make impulse move, pulls back, make impulse move, and then what? Pulls back. So with all this move here, these structures are created, creating what? Higher highs and what? Higher lows. So with this, we understand that this is a low and what? This is a high. This is what? This is a low and then this is what? A high. So I know that this is not new to you guys. You've been seeing this literally everywhere, but now you are still finding it difficult to understand where and how to know when market is or a structure is bullish. Even if a structure is bullish and you are able to spot higher highs and higher low appropriately, correctly, you still find it difficult to even know when a structure or there is a shift in market structure. And also, when you even go to the lower time frame, it is the worst because you get confused without knowing what is happening there. Okay, so if you check my chart on my Telegram, you understand and see how I usually mark my structures. When price is here, I mark my structure, and all what I do is wait for price to give me what? Either a shift or I know if it's still going to continue bullish before to know what exactly I'm doing. Okay. So now I'm going to be showing you guys example on how you can read market structure like a pro. All right. So now let's say market is moving like this, creating higher highs and then moving like this, because like I said, this diagram is just an illustration moving like this, right? Making it look very simple and easy to understand that okay, market is breaking this place and is up always moving upward and then creating higher lows and higher highs. Now you want to trade this continuation, you don't really know where to take trades from. It is very, very difficult. Sometimes you want to take trade from here, you don't know where liquidity is, you don't know which demand is valid, you don't know which one is not valid. So you find it difficult to understand these things, right? So that confusion is going to be clear and then taken away from you today, and then you understand how to read structure like a pro you are. So here we have what? This is a low, and this low was not taken, which means that this level is what? A protected low. So from here, there was a break of structure here. There was what is a sweep here. There was another what? This was a sweep, and then this was a break of structure. Now, there is a difference between a valid break and a fake break of structure. A valid break of structure is when we have a candle close and not just even a candle close, because sometimes we can have a candle close in the lower time frame and price will still come back to meet that low. Now, example is this one here. Pay close attention to this one I'm going to show you guys. You can see that actually this low here, right? Or yeah, this low created this high here. Okay. And now this low created this high, and when price came back, it respected this one, and this low now created this high. What happened? This was just a wick. It was not a break of structure. That's why when price came down, it took this low and then also took this one to show that these were only a fake break of structure. They were not valid break of structure. Now I want you to understand one thing. When we have a fake break of structure like this, so this let's assume this is now a sweep, and if a higher low sweeps a high, it means that this low is now what, a weak low, which means that price will come back and then take that low, right, before moving up. Okay, so now if you are trying to buy here, it means that you're going to be taken out because this low did not break structure properly. This is one secret you should know about market structure and also break of structure. This is something people will not tell you. Now, this is now what, a valid break of structure, because from here we can say we have what, a candle close above, and possibly maybe price kept on going to the upside. That makes this what, level, a clean demand valid level. So if price is coming back down here and then it failed to come into this level and then it start pushing up again, right? Giving doesn't mean that this is what, a valid break of structure. I'm sorry, this one is um that doesn't mean that this is now what, a demand zone, because it can just come back up here and then sweep this high. From there, price will come back, and what is going to happen here is that price will react to this to this demand zone, and then come back down again to use this demand zone, right, to go up like that. So this is how it happens, and you have to like train yourself to understand market structure properly. So this is exactly what happened here, right? So this is exactly what happened here. As you can see that this low, right, created this high, and it was just what, a sweep of liquidity. Then it came back down, used this particular low here, right, push price up again, give us another what, sweep of liquidity. Before you can then see that price came down, taking this low and then taking this low out, the two of them out. You can see how it wicked down before it then moved up. I'm not just saying this because this has already played out. I'm saying this because I know this is what happens. So this is on the daily time frame, right? Now we want to understand that, okay, since we understand that this is a break of structure and this is what, another valid break of structure. So this one now is our what? Our last higher low. This is our last higher low. Now, this higher low has been taken out with this move that you're seeing here. And then price has come back here, drop, and then coming into this area here, using this candle, use this as supply zone to move price down. The reason is because now GBP USD has already changed structure and price is coming back down to this monthly low. So if price is coming back here, now we want to go back to 4-hour time frame because we now understand what is happening on the daily time frame on GBP USD. So now let's go to 4-hour time frame. So on the 4-hour time frame, we now have a lot of structure to work with. So from this area that price rejected, we want to see how we can read our structure to know the direction of the market, because you can see that this is a higher time frame key level, and price gave us what, a shift in market structure on the 4-hour time frame, right? A shift in market structure on the 4-hour time frame. So now for most traders prefer to trade 4-hour time frame. Most traders prefer to trade the 1-hour time frame. So, but we are using 4-hour time frame here. Please, is my screen blank? I want to know, please. If you can see my screen, please comment, drop a comment on the chat box. Comment on the chat box if you can see my screen. If you can see my screen, comment on the chat box. If you can see my screen, comment on the chat box, please. Okay. So let's continue. Please, if your screen is blank, I think it's either your network or something, okay? So now this is now we are trying to understand the market structure, right? So let's try and see how we can use 1 hour time frame for this. So let's use 1 hour time frame. I think 1 hour time frame is going to give us proper and clear view of the charts. All right. So now remember, this is our monthly high. So from this monthly high, you can see how price rejected that level and it came down. It gave us what? This break of structure here. Okay. So sorry, this shift of market structure, and this shift of market structure here is someone is saying my screen is very small from here. Is it your phone? Maybe it's your phone. Please, if you're learning something from this live stream, let me see. Drop a comment. Let me see if you're learning something or if it is valuable. Are you getting value from me? Are you getting value from this? Let me see. If you're getting value, let me see a comment that I'm getting value. I want to see more people comment. Yeah, it's so sappy, super valuable. Optimal, impactful. Yes, I'm getting value because I started learning SIK recently. Please, what is SIK, please? Anybody know what SIK is? What is SIK? Learning something new. Getting value. Josh. All right, so let's continue. It's very valuable. Please write on. They can rewatch the video later. Okay, let's continue, guys. So here now, this is where the price is coming from. Monthly high price is coming from, and then it gave us what? A shift. So from this shift now, we can clearly say, okay, this is our supply zone, right? So this is our supply zone from here. All right. So this is our supply zone, and from here, this is where we would have got entry from, and then have our stop loss just above the high there, and then target this low. Okay, target this low. So now what I'm actually using here is change the state of delivery. I don't know how many of you understand or know what change in state of delivery mean, but this is actually a change in state of delivery entry I'm using here, right? If you don't know what it means, I will not start explaining what change in state of delivery means. You can type it down and then go to YouTube and search change in state of delivery. Change in state of delivery is an entry model which works very, very well. Okay, SLK means structure, liquidity, and key level. Okay, sorry, I didn't know that. I didn't know that SLK in short time. Okay, it's fine. Okay, so now you can see that from here, right, is all what you have to do is to understand, okay, which low created this high. You now say, okay, this low actually created this high. And now you only have to mark and then wait for price to take this low. Immediately price takes this low, you then know, okay, this is now a break of structure, confirming that price is about to go down. If that after this rejection and price came here, it failed to give a candle close below this level, it means that price would have still pushed back up into this level. But for the fact that price gave us this level, and then being that this is 1 hour time frame, this candle here, you can see from this candle, 1, 2 candle, from here till this candle that week, that high, that monthly high, there was no red candle that interrupted it in the middle. That's why I picked this area as my entry point. Go and watch change in state of delivery. You understand why I marked this level as my entry. And I believe most of you have been seeing how I usually take entries on my Telegram channel. It is almost the same thing like this. There's nothing I've not changed anything. It's just how I use it, right? So that is it. So now you would have used this as your take profit point. Okay. So now I want you guys to understand that from this point here, there is what? A break of structure. So now let's say this is our key level, and maybe we have another key level down here. And this is how price was pushing into this level, right? And then maybe possibly take this high, and then this is our like a low here. So price start pushing back down, and instead of using maybe a candle, giving us a candle close below this level, it starts pushing back up again. It means that as price is coming back in, maybe it's literally going to take this high again. Now this low is still valid. You can now decide to mark this low and wait to see if price is going to take this low. Taking this low means that we must see what? A candle close below this level for us to confirm that this supply zone is going to be a valid one, because without a close, it means that this supply zone is not going to be valid. Price will come and then it will only react to it, and then it will break past it and continue, maybe retest and continue going back. So like this now, until we have a candle close below this level, then it means that any supply zone around that area is going to be what? A valid one. And then that's how price is going to continue going bearish until we see something different. Maybe price start giving us what? A bullish intent, using maybe a key level as a bullish intent to push price up. So that's how it works. So that's why from this point as a monthly key level, we start paying attention to the last low that created that high. And from here, you can see that this low was, there was a shift on this low, and then this level now became valid for our entry. From here, we have another what? A break of structure, and then another what? So we are trying to restructure on GBP USD right now. Remember, we have what? We have our weekly low here and we have monthly low. So price is yet to come into this weekly low. First of all, we are going to be targeting this weekly low on GBP USD before even talking about the monthly low. So GBP USD structure is still very, very, very much what? Bearish at this point. So being bearish means that since we have a break of structure, see, let me tell you guys one thing. One thing you should not do as a trader is, if market has given you a shift in market structure, like this one, we now have a shift, and also what market is from a strong key level on the monthly time frame, that alone is enough to tell you that you shouldn't come and start marking this level to buy. Don't do this mistake. As a trader, stop making these mistakes. It is not good. It is not good. stop doing this mistake, marking demand zone to buy from, right? Is not good at all when you start marking demand zones to buy from. So let's say from this demand zone now, you place your buy limit and then price comes in, weak you out. So what I usually do, I don't trade like this. I don't trade this way. What I do is I only target monthly low, daily low, weekly high, and weekly low, weekly high, daily high, and you get stuff like that. That's how I trade. I don't you will never see me mark a level like this and say I want to buy from here or I want to sell from here. That's not how I trade. So if you are going to be following me closely and trade the same way and the same pattern I trade, you must pay close attention to how I mark levels and how I trade, also how I take my entries. So pay attention since this is a monthly high and this is our weekly low. So we are targeting weekly low on GBP USD, right? So from here, we now know, okay, from this level here, this was what? So here is what a very strong level as well, and this can act as let's say a liquidity. This can act as a liquidity, or we can use this like this. So the price has already mitigated this level, right? Let's say price has already mitigated that level, and price it what gave us a break of structure down here. So now we should be targeting this low as liquidity. Okay, we're targeting that low as liquidity. So from this point here, you can say, okay, this one is a strong level for us, knowing that, okay, that level hasn't yet been mitigated. Price might want to come here, price might want to come there. Now, what we have to do is this point act as what? A supply level for us, right? So now from this point to this point, where do we have our last high? And we also want to know if there is what? A shift in market structure from that point, right? So don't forget that we have two levels we should be paying close attention to. This one is number one, this one is number two. So what we have to do right now, try to read our market structure. So from here, we have what? Higher high, higher low, higher high, higher low. Price failed to go above that and then it dropped, giving us what? A break or a shift in market structure, signifying that market wants to go down. Okay. So now from this point, we know that market wants to go down. So price came in here, it used this level to push price back up, and this acted as our liquidity. Price use that to grab that liquidity. So now we are going bearish on this pair. So the area we should be looking out for a sell is number one, this area. Why are we using this area? Because since after price gave us what? A break of structure, price has not yet come to this area. So we have to pay close attention. So if you have been following me very well, you know that I don't just take trades when price is at what? Maybe a level that I'm expecting that it's going to sell. I don't just take price. I don't just take entry at them. Now, what I usually do is I have to wait for more and extra confirmation. Now, see, understand one thing, that it doesn't mean if you enter early or not, because sometimes you can enter early and you don't have the same risk to reward compared to the person that maybe waited for price to give that clear intent of market direction before taking entry. So you can take your entry here and then you end up having 1:2 or 1:3. Another person waits for price to give clear market intent and then takes his own entry here, and then that person will have even 1:5 or 1:6. So it doesn't matter if you enter early or not. Okay, so all what you have to do is wait for price to give you that clear market intent before you take any trade. Okay, so now what we have to do is that we want to wait for price to come into this level. before we take entry. So now this is where market stopped on Friday. So what I'm going to be doing now is I'm going to move on to another pair. Let's see how we can understand and continue this, because now on GBP USD, I don't accept. I'm going to check my Telegram channel, maybe some trades I took, because I can't really remember some of the trades I took from on this pair, right? I can't really remember. Can't really remember. So that is it for GBP USD. And in all what anything you do, please make sure that you understand that GBP USD is targeting this weekly low first before this monthly low. So anything you are doing, don't go and be buying GBP USD. Focus on the sales, because price has already given us what? A shift in market structure. And that shift in market structure simply means that market is going to be targeting the weekly low, because market has already targeted the monthly high, sorry, weekly high, not the monthly high. So if possible, we see anything, maybe price comes here and then take this high, then it means that price is going to definitely return back here and possibly take the monthly high before continuing coming lower, because price had not yet taken what? The monthly high on GBP USD. All right, so let's dive into Euro USD, because I know very well that I've been trading Euro USD and I've been making a whole lot of money from this pair, and it's really like a good pair to me. I won't lie, it's a good pair. I've made a lot of money from it, even though sometimes it doesn't work, but I made good money from it. And also gold as well. I've made good money from it. So on Friday, I took good entry from this point, and I think I left somewhere around here, because it was not really giving that confirmation, but I actually knew that price was going to move up to this level. Being that it was on Friday, I didn't just want to hold trade for that long, so I left it very early. Okay, so now let's look at gold together. I remember that gold, I gave some gold analysis, and I remember the one I gave 1:3 out the other day, and some of them that I've been sending out. I don't really like trading gold when it just created a new all-time high. I focus on trading gold when I see that it's inside or within a range like this, right? That's when I focus on trading gold, because anything all-time high, you can see how it created all-time high and then the massive drop to the downside. You can see how it created all-time high, then another drop to the downside. So maybe possibly the same thing is going to happen here, maybe create another all-time high and then maybe another massive drop to the downside. So that is how gold works, right? So you just have to pay close attention to it and know what you are doing. So you don't rush trade gold. So if we are to analyze gold and then also look at the market structure, the same thing that we did on GBP USD, you will also see that it is almost the same thing. And this pattern, it keeps on repeating itself. It's not something you come on the chart every day and see that, oh, it's a different thing today. It was a different thing yesterday. This stuff keep repeating itself, right? So this stuff keep repeating itself. So if you come on the monthly time frame here, you are not seeing anything. From where I can see something on the monthly time frame is this level, and which it is very, very far from where the current price is. So we have to look at the weekly time frame. On the weekly time frame, nothing interesting as well. So all what we have to do is maybe just mark, but we are not going to be marking all this level and come into this level before taking in any trade, right? So all what we have to go on the daily time frame again, what we are trying to look out for is to look for a level that is strong enough that price is going to respect that level anytime it comes. So now I can see that we have one here, which is very valid. Okay, so we have one here. This one is a valid level on the daily time frame for gold, right? So anytime we see price comes here, price is definitely going to react that off that level and then keeps going to the upside again. So now on the 4-hour time frame, we also have to look at the 4-hour time frame, because if you are a day trader, you can't just mark a level like this and wait for price to come, because you don't know when price is going to come to that level. All what you want to do right now is to know, okay, if market is going to come to this level, I want to buy, right? So on the 4-hour time frame, you cannot just mark and then sit and wait for price to come there. But the only level I can see right now on gold is that this level is very, very strong, and I believe very well that if price should come here, price is going to buy. So all what I'm going to send it to the channel tomorrow morning, that this level is where I'm expecting for on gold next. And you guys already know how we do it. If you have been following my setup on the Telegram channel, you already know how we do it, that this is how I do it. So I'll be waiting for gold to come into this level. Whenever it's ready to come here, and then I will have my buy limit set and my stop loss, right? Then we can say, okay, from that point, we are buying gold all the way to the upside, all the way to upside. So another level is that one has already been mitigated. This one has already been mitigated. So we don't want to look at that one for now. So if that was on chart, definitely this one here, I would have taken this trade. I think we took this trade. Yes, now. I think we took this trade. I think this was the trade we took. Oh, am I? Is this not the trade we took that day? Okay, it's not. It's not. I think it was somewhere around here. It was somewhere this area here. So this one here, if that was on chart, maybe I really wanted to trade it, I would have had it, have my stop loss just beneath this area, maybe target this high, 1:3 hour. See, would have made profit and then leave the market. But now this is the next level I'm expecting on gold. So from this level here, we are going to be targeting 1:3 hour on gold. So on Monday, tomorrow, I'm going to send this to the channel, right? So if you want to reach structure on this particular one here, what we have to do is here, break of structure, right? This is a sweep of liquidity, right? It's not really a break of structure. So now from this area here, this is what a demand, price mitigated that level. So we have our stop loss, but this is not really a good one. So you can just go for 1:2. So now, are we still, if we are still to go into lower time frame, right, we can still go lower, but going lower, we have to understand market structure. This is one thing I do. When I mark my levels, I don't shift them. I just allow it to be, right? And then what I do is just pay attention to that level, wait to see when price is going to come into that level, and then I do whatever thing I want to do. So please, if you have any question, kindly drop your question, because I'll soon be taking questions and then I'll be replying them. If it is a chat question, I'm going to also answer it using the chat, right? If it is for me to analyze and then break it down, I'm going to do that. If it's for me to explain using my mouth, I'm going to do that. If it is for me to, whatever thing you ask, if it is about the chat, I'm going to help you do it, okay? So start dropping your questions on the chat box. I'm going to attend to them. I can see that someone is asking a question here. So once I'm done, I'm going to attend to all questions. So you can drop your question and then I'm going to attend to them. So now this is level that I also pay attention to. So now this was just what a sweep of liquidity. That's why the low that created that high, you can see how price came down, took it out. But this one here is what, this is what I say, this is what a sweep of liquidity here. and let's see what's going to happen if this is going to take this high. So if this takes this high as a sweep, just like this one, immediately and start dropping, you'll see that if price is coming back, it's going to take this low, take this one here, and then it will also take this one here, and that is when it will tap into this one before another massive push to the upside. So that is how and what I'm expecting gold to do this coming week. But we all know that gold sometimes keeps creating higher highs and new all-time high. So it can do something like this, and then before maybe it comes down again or give us another good entry point and reason to buy from without coming here. But from what I have, trust me, I know very well that gold is going to come to this level that I marked, right? These two levels that I mark, sorry, one, not two. This level that I mark here is a very perfect entry to buy gold from. So don't joke with this level. If you are seeing this, go and mark this and keep, right? Go and mark this and keep. So let me take the screenshot. I will update the channel that this is what we are expecting on gold. Delete this. So this is what I'm expecting on gold, right? Um, let's look at someone said I should look at USD So let me start taking questions now. So if you have questions, kindly drop it on the chat box. I'm going to start taking questions. So Kosi M is asking, so do you just wait until gold gets to that low level before you trade? What about selling down to your expected buy zone? So for the past how many weeks now, I can't remember the last time I sold gold. I'm only focusing on the buys. But if I see reason to sell, definitely why not? So let's also look at the possibility of selling gold, right? Because from what I'm seeing right now, honestly, nothing interests me in selling gold right now. Nothing interests me in selling gold right now. So at this point here, if we are to sell gold, this was our last high, right? This was our last high. And this last high, where is the low that created it? This low created this high. And price, why did price start moving back up here? Because price came in, used this open close candle to push price up, making it this level as a liquidity. So it is you can't come here and say you want to sell gold from here. If you try to sell gold from here, you are going to get burnt. So let's look at the 15 minutes chart. So on the 15 minutes chart, it's not even advisable to sell gold at this point, right? Except you want to say, okay, maybe at this point here, you now mark that level and you start to read your market structure from this point to see where we have higher high, higher low, higher high, and higher low. So here is our last high, right? And the low that created that high is this one. And we can say, okay, this is our last key level. But then again, it's not solid. This market is uptrending market. You cannot come and start saying you want to sell, even if you try to sell gold from here, right? Let's say you took a sell from this point, okay? You took a sell from this point, so it's just above that high. you can see that price did not even go 1:2 when it started reversing. And you think this price moving back up here is going to start selling again from here? Definitely it's going to take you out. So that's why you don't just consider every shift or break of structure in a lower time frame as a proper break, because price can still reverse on you. So that's why you have to understand key levels. Make sure that your key levels are marked on the higher time frame and only pay attention to that higher time frame key levels. But if you are looking to straight trade the lower time frame structure, make sure that your lower time frame structure is in line with the higher time frame structure. Or if you understand market structure properly, then it is very easy, you can trade it. But now let's say this you can either switch to line charts. So from the line charts here, you can see, okay, this is a high point and then this is our low that created that high. Now you can switch back to candle. The price even take this flow out. Price did not take this flow out. So why are you looking to sell gold when this last higher low has not yet been taken? So which means the bullish structure is still intact. You are not to start looking for any sales. So until this low is taken out on gold before you can say, okay, you want to look for a supply zone to sell. But so far, this low is still intact, brother. There is no reason for you to start selling gold. Only focus on the buys. So if we have to start selling gold, we want first of all take this low, and then possibly we're now going to start targeting all these lows here. We're now going to start targeting all these lows, this one and possibly this one as liquidity. So that's how I trade. If market is still bullish, I don't trade it. So that's it. So another question someone is asking, Raphael Tosin. So boss, about a sweep, if a candle closes with a body above the previous high or low before going opposite direction, can we consider it valid point of rejection? If a candle closes with a body above a previous high or low before going opposite direction, can we consider it valid point of rejection? So now I'm going to use another chart to illustrate this as an example, right? So let's use let me use Euro USD, right? Let me use Euro USD. Okay, so for Euro USD now, let's go to 1 hour time frame. Okay. Let's focus on this here. Okay. And let's say this is a bullish structure, right? This is a bullish structure. So from this point, so let's say from this point, right? From this point, this is our low and this is high break of structure. So we can say, okay, now this level is a very valid, a very good level for entry on Euro USD, right? So now price created this high here, right? A break of structure, is a break of structure because actually price actually did use this demand zone to push price up. So this was a valid break of structure, and now this was also a valid break of structure because price actually did use this demand zone to push price up. So you are going to see a fake one. So this one here was actually, let's say if it was equal highs. Okay, this was equal high, right? This was equal high. So after price came in here, it came back down. This was a low, right? It came back down, respected, use this level to respect it, push price up. Now this was a last sweep. Now there is a one, I made a video on something. So if you check my video, you'll see. I talked about if market is trying to go lower, you will see that if market was bearish, right? And all of a sudden, instead of price giving us break of structure, you now start giving us sweep. Like something like this is a sweep and start pushing up again, came back down. Instead of breaking structure properly, it will give us another sweep and push up again, comes back down and give us what? Another sweep. It means that it wants to go up. So your price will take those high and then pull back, tap any demand zone there and continue going up. So this is one of my entry model that I like using. Once I see that price has started sweeping lows instead of breaking structures, I start looking for buys. So that is almost the same thing that is happening here. You can see how it started sweeping liquidity low from here, one, this one here. So after this sweep, you can see that price came back, take this, took out this one, took out this one, took this low, because all these ones were just sweep. They were not proper break. That was why price came back, took it out, pushed back up, used this supply zone to mitigate and then send price down. And from there, you can see that it has been bearish from this point. It's been bearish, came back. This is just a sweep. So price can come back here. Let's see if price has given us what? A break of structure. So no break of structure yet. Consider that price coming back here on GBP USD possibly is going to use this one and then start dropping back, targeting this low, and then maybe possibly coming for this one. So this is what I'm expecting on Euro USD this week. So because price has already given us what? A shift. Where is that shift? Now let me clear this chart again. So where did the shift happen? So this is our last higher high, right? And where is our last higher low that created that high? This is it. So what happened now? Price has already cleared this one. Also what? Cleared this one. So making it what? A valid break of structure that price is about to what? Go down. But now we also have to consider the high time frame to know if this is actually what is happening. Where is, first of all, did this happen? On the daily time frame or weekly time frame? Is it from a higher time frame structure or higher time frame supply zone? Ask yourself that question. Is it from a higher time frame supply zone? Number one, you can say, okay, there is no structure here, but first of all, you can say, okay, use this one. Price is reacting off. You can see multiple week rejection from this point. One, two, three, four, five. So all of these candles are closing below here, which signifies price might want to sell when it comes back. So now this is actually reacting off a strong key level on the daily time frame. So we can also say, let's look at the weekly time frame to see what's happening. So on the weekly time frame as well, you can see that price is also reacting off a weekly key level. If you understand fresh and on fresh key level, you understand this. Though this is not really a fresh key level, this is on fresh key level because price has already used it. But now on the lower time frame, that is what we are going to be paying close attention to know what's happening. So you can see that this is a very strong key level on the weekly time frame. So that's why this is happening. So all of these things are happening on the weekly time frame strong level, right? So now with this, you now have a clue that, okay, from this higher high here, right? These are highest points acting around key level time, higher time frame structure. So this was a low that created that high. You now mark it out. This has now been taken. Then another low, this one here has also already been taken. Price then comes back here. Did what? Take this as liquidity. Then what to do is wait. Okay, from here we want to see price start dropping or selling on the 15 minutes time frame. Okay, so here on the 15 minutes time frame, what are we looking at? We want to see if there's a break of structure first. If there's no break of structure, then it means nothing. So this area has already been mitigated. So we want to see, okay, fine, 15 minutes time frame. Where is our last higher high? That's why I say there is no need for you to start rushing into the charts. Let's say you want to start selling here and price, because price might continue going up. So you want to have more. My Telegram channel, go and check very well. You see that I marked a level around this area here on GBP US. I was expecting price to come, but did we take any trade on Friday on Euro USD? We did not take any trade. Now, why didn't I take any trade? I actually waited to see what's going to happen at that level. So this happened on Euro USD. So this week now is going to give me a confirmation that we are going to sell Euro USD. And what's that confirmation? That confirmation is going to be, okay, fine. I know that price has reached this high, and then now this is my highest point, okay? And where is the low that created that high? This one here, price already taking it out. I switch back, price already taking it out, and even give another break below here. It was not just a sweep. There was a candle close below. So from this point here, it is very solid for me to say, okay, let me start selling this pair from here. Either this area, any of this area, we can use this point to sell and then have a stop loss, maybe even if it's 12 pips, and then let's see 15 minutes, 5 minutes time frame, see if we can have something interesting, a good area for stop loss. That's what I'm trying to look for now. So we can reduce it to this area here as our stop loss. Okay. Or even if I don't want to take entry from here, I might as well wait to see how price is going to come and maybe take this low. So after price takes this low, then it will now be clear to me that price is actually trying to go down. Then I will look for a structure or supply zone and join the trend all the way down, because I know that drop that is about to happen is definitely coming here on Euro USD, right? I know that it's definitely going to come there on Euro USD. So if I don't take it here, I can decide to take it at anywhere after a break of this low to confirm that the price is going to drop. Okay. So first target can actually be this level, because it's a kind of strong level. First liquidity zone will be targeted at this point. The second will be targeted at this point. So that is it. As simple as that. Okay, so I'm taking more questions so we can round up. I don't know how many minutes we've done this. Now, let me see. Yeah, 1 hour, 18 minutes. So we still have like maybe 20 minutes. So let me use this time to answer more questions. Okay, so Kosi is asking, if we get a choke on 1 hour, can we sell down to the D1 key level and buy from there? Yes, you can actually do that. You can actually do that. So if you get a change of character on 1 hour time frame, just like what I showed you on GBP USD, right? That price got rejected on daily key level. This is it. That is a monthly high, right? So on the 1 hour time frame, there was what? There was a change in a change of character, which was this, right? This was a higher low and this was a higher high. So price came down, gave us what? A change of character. So we start selling from here. So now price is actually targeting what? The weekly low, which is this low you're seeing here. So these are weekly low and these are monthly low. So GBP USD is definitely coming down to this level. And before this even happened, go to my Telegram channel and check again. You will see when I said that GBP USD on the monthly time frame is actually targeting our monthly low. So that monthly low is what we are hoping to see if price is going to come to that monthly low, which is this monthly low here. Okay. So let me take more questions. Kali is asking, if a key level is invalidated, are we going to change bias? Yes, if a key level is invalidated, you can actually not change bias immediately, just like what is happening on Euro USD. Price is really acting around this key level on the weekly time frame, which you can see that price is acting here. this is a key level on the weekly time frame. So you have this key level on the weekly time frame. So you can't literally say you want to change bias at this point. Except now what you have to do, if price is playing around a key level like this, all you have to do is just try to understand market structure. By reading structure, you will understand what is happening. Okay. So by reading structure, you will understand what is happening. Okay. So by reading structure, you will understand what is happening. So now price came into that key level at first. Okay. Price came into that key level at first. It came into that key level at first. This was our higher high, and this was our higher low that created that high. You can, and this was our protected low. Price did not take this low out. Instead, what happened? Price gave us entry for a buy, which means price is still bullish, even though it has already tested that key level. Now, I want to show you how many trades you would have won at this point. Now, price pushed in back again, gave us what? A break of structure inside around that key level again, and came back what? It came back down again to this level, right? Now you confirm that this was what? A break of structure. Now you take entry again from here and have your stop loss beneath this level here, and possibly maybe targeting that high, right? How many winning trades? Two winning trades. Now I'm showing you by following market structure how many trades you would have won even around a key level. Though I know that yes, when price is at a key level like this, all you have to start preparing yourself is to prepare yourself looking for what? A change in character, a change in character, change of structure, right? Rather. But instead of price changing structure, giving you a change of structure, right? It broke structure, and then the demand zone becomes what? Valid. So now, then again, price came back here. It failed to give you a break of structure. Okay, so sorry, the part took like so they just brought it back. So now let's continue. So now we have won two trades using what? Market structure. So price did what again? It came back, it failed to clear this high. Instead, it stopped, it created liquidity there. Okay. And from that point, what happened? This area now, price did what? It came back, it weak this low, right? You can see when I said that when we don't have a proper break structure and we have a sweep, use that low as liquidity. So from here, price came down. You have entered a buy trade from this one because I know that there was no break of structure. Anything can happen, but you can see that price used this one now to make the final push into this level. And what happened? Followed by a massive drop to the downside, breaking this structure, tapping this level as a key level, right? That was the first change in change in structure, change of structure. Now from that point, price dropped to this level. Did we have any break of structure yet? Yes, there was a break of structure, but here was a break of structure. Now we would say that this was a break of structure here. This particular low was a proper break of structure. Now you can see that From this point, that was where we started having break of structure on Euro USD, and price came back, used this one to drop. This now become our what? A protected high. From this point here, a break of structure and this low here, price return back, use this area here. You can see that now the structure has changed, and now we are what? We are bearish on Euro USD from that point. Okay? And we targeted where? This low. How many wins is that? Now, if that I'm to trade just one pair, I would catch all this move with the help of understanding market structure. That's why it's not good to jump from one strategy to another, because there is no strategy you want to learn today that you will not need market structure. You need market structure in any strategy that you want to trade as a trader. You need market structure. So from here now, you can see that price gave us what? The final and confirmed break of structure, which was this one here. Then price then again comes back here again, gave us what? A sweep of this high. Don't forget that all these ones have been mitigated. This one now have been mitigated here. And this one now have given us what? A break of structure. And price is coming back to mitigate this one here, right? To give us that final push to the downside. So price is definitely coming here on Euro USD. So let's see how this is going to play out on Monday. Let's see if this drop will happen, but I'm still focusing on sales on Euro USD. All right. So that is how we will have gotten 1, 2, 3, 4, and then this is the fifth trade on just one pair. Okay. So let's look at another question. Let's take another question. Somebody's asking, can you explain open close candle? I cannot explain open close candle on this because I don't trade open close candle. I don't really trade it, but I know open close candle. I don't trade it. I only do key levels, right? I have a friend who trades open close, but I don't trade open close. I don't really trust open close like that. But if you have to trade open close, look at the daily time frame. Let me show you an example of open close candle. Open close candle is like it's just like when you see an open close candle, we have a hidden demand or supply zone in an open close candle, right? But now, how do you know a valid open close candle? It is very difficult if you are just starting off new, right? On the trying to understand or learn open close, because all of these candles are open close. All of this candle. When one candle closes, another one opens. So every of these are open, close, open, close, open, close. So which one is valid and which one should you trade? That is where the confusion comes in. So I would advise you just avoid open close candle for now, and then focus on only key levels, your key levels, and knowing what to do next. Okay. So next question. EU is going to sell from your analysis. Yeah, but not really sure yet till we get some extra confirmation, because for me to take EU at that point, I am not going to take it except I have more confirmation, like the low that I have pointed out, that I will be expecting to see that low taken before I would confirm any sales on Euro USD. So I want to see this low taken out on Euro USD before I would confirm the sales to happen. So at least if we don't have this in there, so maybe I want to see this low before I confirm any sales on Euro USD. Okay, I'm still checking more questions. So do you trade Nasdaq? Someone is asking if I trade Nasdaq. I don't trade Nasdaq. I don't trade Nasdaq. So another person, Jeffrey, please, how do you mark your key levels? The beginning of this video, I've already done that. So all you have to do is rewatch the video. Once you are done with the live stream, you can rewatch the video, and also you can grab my course, my video courses for 50,000 naira. All of these things, I've explained them, and they are all well detailed enough for you to understand and know, from marking your key levels, knowing where to mark your key levels, understanding market structure, and also entry model. So all of these things are in my mentorship video. And trust me, if you want to end your 2025 in a grand style, you should get that mentorship video and then learn how to trade on your own. All right. So I think that is all I have to show you guys today. 1 hour, 31 minutes on this live stream. I have not really done this in a very long time. If you check the last time I streamed on YouTube, it was like 10 months ago. So this is something I want to be doing once a week. And I'll be touching a lot of currency pairs, analyzing a lot of currency pairs, GBP. These are the only stocks I trade, right? I don't trade USD card. I only added it because I was hoping to see. I was expecting to see. I had a setup on it. So this is just like the same thing I just finished explaining, right? I was supposed to buy from here, right? I was supposed to buy from here, but this price is coming from a higher time frame key level. And if price is coming from a higher time frame key level like this, it makes a demand zone weak, because price can just come and then it will just react off it, and the next thing you will see, it will drop massively or aggressively. So that's why I don't really trade demand zone if price is coming from a higher time frame key level. I don't also trade supply zone if price is coming from a higher time frame demand level. Understand that? So it is just logic. When you hear people say logic over pattern, this is a pattern. Demand zone is a pattern right now, but the logic comes in by understanding that price is coming from a higher time frame supply zone. So which means you now apply your logic. You are not to trade this demand zone. It is not valid. Do you understand? So as simple as that. And I just want you guys to know that it is very, very, very easy to do these things, right? It's very easy to do these things. And so it's very easy to do these things, right? I'm going to, someone is asking a question already. So the next question is from Kosi. Please, which load do you want to see taken out on Euro USD to confirm the sell? Could you touch the low? Let me see. Yes, I already marked out that level. I already marked out that level. So the low I'm actually waiting for on Euro USD is the recent low. That's what I'm waiting for, right? So this is the recent low. I already marked it out. So here, that is where I'm expecting to sell Euro USD from. All right. So another question from Kosi again, please. Someone is asking I should analyze GBP CHF. But Banks, thanks a lot for this live stream. It was very insightful and impactful. Yeah, you're welcome, Kosi. Someone is asking I should analyze GBP CHF. So this is the last question I'm going to take. So I'm going to analyze GBP CHF for you. GBP CHF. So this is the last question I'm going to take for today. And then I will announce when we are going to start our live stream, if we are going to be doing this every Monday or every Wednesday. And also I'm going to fix a time for it. Okay. So I don't know if you guys can remember this GBP CHF that I dropped. I talked about this key level, this demand zone, right? Can you guys remember this trade we took last week? It was a 1 to 3 trade, but actually I didn't want to hold it to this demand zone. But I know very well that price is coming into this demand zone. So I have nothing much on this pair. I had a key level here, which price did not come, and I also have what a demand zone. So I was hoping that if price comes here first before coming to this demand zone, I will not take the buy. But if price comes to this demand zone, I'm going to buy it again, hoping for price to return back to this key level. Then from there, we are going to sell more because this GBP CHF is actually a downtrending market. So a downtrending market means this buy is just a pullback, right? It's just a short-term pullback. So whatever thing you're seeing happening right now is just a short-term pullback. So the sales will continue more or lower when we hit the higher time frame key level, which is this level on GBP. So guys, I really do appreciate you guys tuning in, and um, till we see some other time. And please, if you're not on my Telegram channel, kindly join my Telegram channel. You can check any of the video, check the description, click the link to join my Telegram channel. And also, I have a lot of offers for you guys, so you can kindly check the pin message on the Telegram, then you can see the offers. Okay. Thank you for joining in, and see you guys next time. Bye for now. Hey, just back alive. How are you? How are you? What's up? What's good? I was having live stream. Getting a live stream. Abubago Folk, are you at home? Were you crying? I just finished having my bath. Where is daddy? So no outing today. That's good though. That's really, really good. You're like you're sick. Are you sick? Go and get the drugs now. Get up, bless up, go and get the drugs now. It's far away. What is far? Hmm? What is it? Uh-uh. I'm not. Thank you, thank you, thank you. Let me go and carry this water down.